damn phones. Babylons can't crack the code.
Welcome to B-MoneyTrading. I'm gonna make this short and quick. You can see I'm down. Well, that's for the week. We'll go for the day. Today was no bueno. I'm down 8 point. What is that? 39%. A little over $200. I think it's like $209 around there. I added to all my positions as well. I added 200 to my account and got Robinhood Gold, which I ended up selecting the tier that I ended up having $2,000 of extra buying power, which has cost me $10 a month to borrow that money. And basically I use that. I still have a little under 1,000 of it left in buying power, and I added to all my positions, as you can see, and they all continued to sell off. I think I'm only up in one, and that's Carvana, and it's only like by like $1 or so. It's, you know, I'm not up nothing, basically break even. And so we'll see how all this plays out. I'm down for the week, 8.76%, $220. It's really today's what really hurt me, as we can see on the crappy chart that they offer on the web platform. So that's where we're at. The big talk is, as you can see down here, Apple being down, and the supply chain reports. And I just got done reading this article, and it's talking about how they're going to stop giving out information on the supply, demand, and I guess how much that their outlook is that they're going to end up making, like how many units they're going to make, that they're going to stop doing that. And they're trying to get investors to focus more on the services the business offers. And so, as you can see here, it talks about the good news for patient long-term investors is that when the market overreacts to supply chain rumors, it can present a compelling buying opportunity. Morgan Stanley analysis Katie Huberty argued last week that investors are still focusing too much on unit sales, failing to properly appreciate the growing importance of the services businesses. And then it does a quote from the CEO, Tim Cook, about how he basically has been suggesting the same thing. And so they're going to stop reporting their expected orders, I guess, you know, builds, how many units are going to be in demand, and try to get investors to focus more on what the revenue is as far as what they're generating as a business as a whole, you know, the services that they offer. Which I understand where they're trying to take it in a different direction. You know, the thing about Apple is that they've always tried to be on the forefront of it all, and, you know, innovating new and more advanced things than anybody else, and taking things in a totally different direction than anyone else. And so this could be a big hit, or it could be a big bust. We'll see how it plays out. They have very good consistency as far as hitting it big, and so this may be one of the you know, good things to do. So this could be an opportunity to get in, or, you know, could be your last chance to get out. We'll see what happens. I think, you know, I'll continue to read the fundamental news, and I'll continue to watch the charting on it and base my decision on that as far as whether to take on more shares or start getting out of my position and looking maybe later on to get in, or just stay out altogether. So with that said, I'm going to go ahead and call it a night. I know it's a quick video, but sometimes those are the best ones. So it is 1:27 in the morning. I have the $2,000 margin, and basically that gives me a chance to grow the account faster. But also for the new investors, beginner investors, I think you understand what margin is. It's basically credit. And, you know, if you have a credit card and you spend more than what you can afford to pay on your credit card, then it gives you the opportunity to go in debt and bankruptcy that much sooner and easier than if you're just buying straight out cash everything. And so this is kind of the same thing. It gives me a chance to grow the account faster, but if the stocks that I'm holding that I buy with it aren't performing and continue to go down in value, and I keep taking losses on it, the losses are going to be bigger, and my account is going to go down faster than if I was just having a cash account only. So it just it's kind of self-explanatory, but you'd be surprised. Some people just don't have that kind of experience. They're new to trading, and I totally get that. Understanding the dynamics of a margin account. And you think, well, I'm not gonna go in through the whole spill, but basically they give me $2,000. I'm paying $10 a month to borrow that $2,000, and I have to keep my account above a certain amount of money. If it drops below it, then they can issue me a margin call, and basically I can't buy anything else, and they're gonna force me to sell some of my positions until I can get my account above a certain amount, or they're gonna cut me off and want their money and take their money back. Whatever's left is what I have left, and we don't want that. So it's very important not to over leverage yourself and take on more than what you can afford to handle, so that if things go south, I still have plenty of money that I could add to the account and get out of, not get a margin call, but ideally I would start unloading some of my positions as it got closer to getting a margin call, and then just maybe getting rid of the Robinhood Gold and going back to cash until the market starts looking better. Right now I think that this is an ample opportunity, and this is just my opinion and my opinion only. I think this is an opportunity to buy in, because I don't believe that it's just going to continue to sell off. I think that we're getting close to a point that we're going to see a reversal and a bounce back up, and that will break that 274 area on the SPY, and then I think it'll be after Thanksgiving when we everyone gets back to work. But these are just my thoughts, and keep in mind my experience. I did a video on it, and my experience I have is like about 2.5 years, a little over 2.5 years of trading experience. And so that's not really a whole lot of experience being in the market, because the market's constantly changing, and since I've been in the market, I've never seen it act like this. I've never this whole year, like last year was totally different compared to this year. I've never seen the market be like it's been. Just if you look at the SPY chart on the weekly, it's just been volatile, just rough, choppy waves. So anyhow, that said, I'm gonna have a good night. You have a good night, and I'll see y'all in the morning. Talk to y'all later. Peace.